Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 14th. Mike Boutros, good to be with you guys here. Good morning, GS, Steven, Joseph, Ken. Great to see you guys in the room. So we do have a lot to talk about. This is the last scalp webinar for the week. I want to get as many of your questions out as possible. So if you guys have any pairs or specific trade setups that you're looking at, please feel free to throw them out on the message board. It's been kind of messy on some of the scalps, guys. I understand it's not the best ideal conditions on some of these breakout plays. We really need to pick and choose where we're operating our near-term strategies are. But there have been some sweet plays on some of the Kiwi crosses, kind of lackluster a little bit. The Euro's coming into an interesting area, and certainly the Aussie here coming into a resistance that we noted last night in the report. So we'll go over those, and then we'll leave some time at the end. Strategy questions, pairs that you want to check out, feel free to throw them throughout the session, guys. So before we get started, just a quick look at the relative performance of the greenback heading into the U.S. trade session. Again, starting off the trade session here, weaker against most of its major counterparts. The yen, a little bit of a push higher here, down, what is that, 0.3% versus the yen and 0.14% versus the Aussie. A little bit of a pullback on both of those, but Swissy, Euro, Kiwi, Pound, all stronger so far on this session. Here's what the equity board looks like as we head into the open. Europe is trading higher. We did get some data out of Europe that we'll look at in a moment. You got the DAX up 0.78%. FTSE MIB, for FTSE 100 rather, up 0.18%. Mixed performance in Asia Pac last night. Nikkei was down about a percentage point. Hang Seng almost unchanged, just a fractional point higher. Heading into the data block, I just want to review some of the prints that we've gotten as of late. Obviously, Eurozone data, we talked about that yesterday, came in line with expectations. But specifically, heading into the UK this morning, where was it? Or excuse me, the retail sales for New Zealand last night. We saw that come in much stronger than expected, and that's what fueled another push higher. It was 2.7, okay? The 1.7 was expected to drop to 1.6 on retail sales. Not only did that beat expectations by a large amount, but you also got an upward revision of the previous print from 1.7 to 1.9. So the data on the Kiwi side continuing to fuel the upside. That still continued to fizzle off. We couldn't really get a break of resistance. And again, into today, we got PPI from the United States just a couple of minutes ago, weaker than expected on that front, and you're still seeing not much of a major reaction here for the dollar. So before we jump into the crosses, here's what the dollar index looks like. We did break below that target. Raj, if you're in the room here, I know that you were looking at that short on the dollar index. That target actually did hit yesterday, 11,664. That's the resistance level that you want to watch heading into today at this point. Not really interested in pressing too much dollar shorts here until we get through the bottom of that median line parallel. Okay, so that highlighted area of resistance or support rather that we talked about earlier in the week, we're testing right in there right now. So a break below essentially the lows that we've made already, let's say 10,630, looks for a drop into this zone. That basically takes you just below 11,560, let's say. Near term, though, we're going to want to see if we make it through that parallel A and B near-term resistance. Look for yesterday's close. Look for that 1618 off the high, 11,665, 664. Unemployment claim is so bad, though. Could we go to the Euro Yen well? Euro Yen Mike, well, good morning to you first. Sandy, great to see you as well. Yeah, let's take a look. Here's the thing, Sandy. If the initial reaction for the release doesn't press the trade, I'll tend not to really try to press into it. Here's the data that Sandy's talking about. So the ILO unemployment for the UK came in. Are you talking about the Eurozone? Not sure which unemployment report you're talking about there, Sandy. If you're talking about weekly jobless claims for the United States, that's very rarely going to really press a trade, and specifically on the Euro Yen, I'm not sure if there's going to be much of a press there. But she says, okay, for the U.S., yeah, for the U.S., I wouldn't really make an assumptive trade on a bias based on the weekly jobs claims. This data is very variable, it's very seasonal, it comes out a lot, so a weekly print like that wouldn't really press it. I hear you, Sandy. She says, no, I'm not saying that they're related, but can we look at euro yen? We will. So any questions on the dollar index before we move forward? Just watch that median line there, and if you do break just a basic channel, right? If you take just trendline resistance, basic trendline resistance, mirror it to the low that you made there on the 8th, you can see some nice touches there. And that brings it down to 11,560, like I said. All right. We can jump into the euro yen if you want real quick. We've been looking at the euro yen for a couple of days now. Here's the daily chart looks like. Okay. Really clean as far as this pitchfork that we've been in off the lows. Do you see this? 3 tags of the highs now. So you caught it on the opening range high for the first day of trade for May. We ran into it on the reversal day. Okay, when we reversed course off of that confluence. Okay, this is just a basic, again, parallel off the lows. You saw that nice confluence region there. This 135.94 level is also the reversal day close and the high day close on this stretch here for February. So we were watching that region. We've pushed through. Here's median line resistance catching the highs right now. All right. Roseming saying, are you muted? I'm assuming everyone can hear me, right, guys? We're good? Mark says, I'm short at 135.60. Your stop loss at 136.75. 675. You're basically looking to press against those highs right there, right? Take profits at 133.50. Okay. I do like where you're operating off of. I guess the entry was a little bit. Well, let me jump into the near-term charts before. This is just for guidance, right? Our daily charts. Let me show you the intraday chart. Zoom this out real quick. Okay, so there's that trendline resistance we just tagged. On the entry, you said you had 136.50. Oh, is that right? This is an entry that you're looking to take. Okay, I got you. If you get the extension to that region, I do think you can get a play. But here's the one caveat I'd want to look at. It looks like the momentum signature is already starting to break down. Not sure if we'll get a stretch higher in euro yen per se, but looking at the opening range for the week, if this is constituted of the opening range, remember, Monday, Tuesday starts to give you that initial range. You look for that break. The extension for the high that stretches typically comes into a Thursday or a Friday high. Now, seeing how it's heading into the Thursday session right now, I start to get weary for looking for another stretch into a high into the last day of trade. Sometimes it pans out really well, and you literally close the week at the highs. More than not, it's either a Thursday, Friday kind of stretch. And with the high coming right into that trendline resistance, not sure if we'll get that stretch. If you do, I do like the idea. I do like the idea for sure. Again, we're not trying to necessarily fight the trade here on the Euro rally, guys. But again, coming into that same trend line that's caught the highs so many times. Not only that, if that peak, if this turns over from here, now you've got some divergence to work with below 70, which would be really nice. The trigger on the daily, guys, is obviously going to be the tell here for the broader reversal trade to play the downside. The only thing I would adjust on that a little bit, Mark, and I'm not sure, I want to make sure this is going to come in line with your risk to reward ratio on that trade, but watch that trend line support just off the monthly low. Okay, and also you're also going to have to contend with that 100-day moving average, and that comes in just ahead of the targets that you're looking for. 33.60, you're basically looking at like 33.70 here, just ahead of that 33.50 target. So I hope that helps. Again, that's not necessarily a swing trade, guys, or not necessarily a scalp trade, but always down to give you my feedback on any positions that you're looking to take. So got to jump back into the intraday charts, guys. I will take all your questions. Sandy, I hope that helps also on euro yen to give you some clarity on that. We'll take another look at it later in the session. Since we already talked about it, let me just see if there's any triggers. So this was a trigger I was looking at this morning. Would have been a nice position stop against that high right there. Again, you're looking for about, what's the ATR on this now? About 37 pips per scalp. So watch that 40 hold. Okay, if we get a 40 hold here and a bounce and you get a trigger sub 60, that's a really good tell in near-term price action that this thing is ready to turn around. All right. Terrence says, oh, video and sound is good. Okay, thanks for that, man. Yen is at the previous week high and the weekly R1, says Sandy. Was that the high we just made, Sandy? Okay. Mark says, thank you. Michael, why is there no sound? Please check. Okay, it still seems that Roseman's having problems. Okay. Moving right along. The Aussie dollar. Getting a little messy towards the highs, but the daily chart's really what's offering the most clarity here. So you can see that we were looking at that 81.30 level. By the way, I just want to take a quick sidestep. When within the confines of the swing trades, guys, there's a lot of opportunity. And I just wanted to comment on a question that came out yesterday: is, are the swing setups and the intraday setups always in line? It's a different. The levels are the same, guys. The mapping out is the same. What I will do is I'll do my research, and Jamie will do his research. Before we post, we collaborate, make sure that there's no discrepancies. The one thing you want to keep in mind is if a scalp trade or if a swing trade is looking for an entry here, right, and the stop is up here, okay, we're still on the same page, right? He's looking to take the short and take the stop against this level. For an intraday guy like me, if this level breaks, I can play the long into that, into the target of where I think that stop is going to max out, and that's where we'll take profit. Okay, if we get an entry there, we'll take an entry against that stop. Same thing. So within the confines of the same setups, guys, there is opportunity. I would just really prompt you not to mesh the two strategies together, and we talked about that in the webinar yesterday. Philip says, hi, Mike, how do you calculate this ATR? I mean, I know the indicator and the settings, but how do you know how much of this ATR has already been taken from the move before you jump into the trade and try to squeeze your 25 pips? Good question, Philip. If I'm understanding it correctly, so you're saying if we're putting in 100 pips on a daily basis, how do you know on the day how much we've already spent of that 100 pips? That's irrelevant, right? Don't stress that is what I guess is what I want to say. The point is this: if you're coming into a resistance range or you're coming into a support range and you're looking to take a position or a scalp against that, the ATR is just giving you a gauge of how much the market has moved over X periods. That's it. So off that resistance range, you're still playing within the same range. Doesn't mean you need to spread into a bigger ATR. So how much we've moved of that ATR is going to be irrelevant when we're looking for the intraday trade position. That being said, you can actually look at a report on Daily FX that David Song writes, the dollar report every day, and he'll put on there what percentage of the ATR each pair has moved on a daily basis. For our purposes, coming into the U.S. session or coming into the European session or coming into the Asia Pac session, we just want to gauge what the market has been doing. So I don't want you to stress, have we moved already 100 pips today? That's true if we're looking to stretch into a new position. But if you're looking to play the down stretch or the range that's already been set, that's not going to affect the ATR. Remember, the ATR is just a measure of volatility. Do you know what I mean, Philippe? Let me put it in another way. If the ATR for the daily play is 100 pips, and we've moved 100 pips to the upside, okay, I'd be more inclined to play that 25 pip scalp within that range to the downside. Okay, if the top side breaks, you're right. We've already moved 100. That's going to press the ATR into a larger range. But if the ATR has been X and you're still into that range heading into the U.S. session, you're trading against support or resistance, it's irrespective, right? It's different if you're looking to play the stretch into a new high or if you're looking to play the recovery into the same range. I hope I'm not confusing you. He says, I see. And how do you find that 25% makes sense? So fill up 25%. We went over this yesterday. It's very simple. There's 4 major trading sessions throughout the course of the day. You got Sydney, Asia, Europe, US. And on average, when we're scalping, when we're intraday trading, you look to take a quarter of what the daily is doing. It's a very, very simple, conceptual idea. And again, nothing is static, right? Everything, guys, is based on the market conditions. So if the ATR is really contracting, but you get a breakout trade, I'm not going to necessarily limit myself to a 19 pip play. And with the same respect, if the ATR is really expanding on a breakout or some sort of news event, I'm not maybe going to go for the full 25. If the 25, ATR is starting to blow out into, 40, 50 pips, maybe I'll start to, shave off a little bit early. So we want to be dynamic with the current market conditions, but a quarter of the daily ATR, as a rule of thumb, typically has been, a decent play for me. So Philip, I hope that helps. He says, thanks, with exclamation. Right on. I'm sure someone else in the room had a similar question, so I hope that helps. So on the Aussie dollar, again, here's what it looks like on the intraday. And this is the chart that we put out yesterday and last night. So actuality, guys, that ended up being the actual high for this session. You saw a break back below the 81.30 barrier. If you recall, the night before, 81.30 was the last target that we had noted. This is a near-term structure that I just added last night. I don't want to put too much emphasis on it because you don't have quite that many tags yet, but it does look like it's in play. So you got the median line that caught those highs. The breakout was off the median line, and the peak was caught by the median line parallel. So on the pullback, really nice area of support, right back at 80.74, 80.67, which was, again, the bullish invalidation level last night, right here. And all that means is that's what was needed to break for us to keep the bearish downside bias in play, or to put the downside bias in play. We came right into it. It held as support. Momentum held 40. You can't really get on the short side of the Aussie just yet. So it's an uptrend at resistance, and that seems to be like the play that we come into as we open up the U.S. range for the last couple of days, guys. I know the breakouts have been tough to really get on a scalp basis, and that's okay. Part of trading a strategy like this is knowing when to stay out of the market. I'm not, going to be an advocate of necessarily sitting on the sidelines all the time, but we really need to pick and choose and cherry pick our position. So on the Aussie, kind of looking for a little bit more of a turnaround to be able to play the short side. As far as the longs are concerned, I'm not really interested in playing that until we get through this on a closed basis on the 81.30 here. Next topside objective, guys, is really 82.50. That's a basic 38.2 off the high. Just ahead of that, I would be mindful of 82, which is going to be the high day close. Okay, but essentially, that's going to be the objective here if we push through that 786. Also note that we would be putting in divergence if we close at that level. Mark saying, had that yesterday, couldn't wrap my head around the move of many pairs, so I just sat out for the rest of the day. Mark, you and me both. I actually did take a couple of positions and it ended up flat on the day. There was a loss on the euro yen and there was a gain on the Aussie, but it's tough. It's a tough market to trade right now on these breakouts. For intraday, for guys like us, you need to be really wary because the moves are sharp. The stops is the most critical thing. If you don't have a proper stop, guys, the trade just doesn't go. You can't put it in. Okay? So just keep that in mind. Okay, so that's the Aussie dollar. The next one is the Kiwi, and that's still a preferred play for mine. Again, this was actually a really sweet play last night. I actually did miss the entry on it, so I couldn't get involved, but the pullback played right off of that near-term channel resistance, and you would have squeezed out a nice 25 pip gain off that. Here's what the Kiwi dollar looks like on the daily. It's interesting because on the scale for the daily charts, guys, you might have the same issue at home. It happens sometimes. On the scale on the daily chart, it looks like we came right into this trend line resistance or this median line parallel. On the intraday chart, looks like it just missed. Bottom line, the risk for a 75.80 tag is still what I think could happen in Kiwi, but near term, we'll have to be watching to see if momentum is able to make it back through this 75.50 zone. So essentially, 75.80 is the exact 618 of the range decline from April to the lows we made this month. It is the exact monthly pivot. You guys know I'm not crazy about monthly pivots, but when they line up with key technical levels, it's always prudent to keep an eye on it. And the only other thing I wanted to note, we talked about this yesterday, was that momentum signature on the daily, right? So on a day that we make an outside reversal candle, momentum comes right off 40 into a trigger break to the upside. That's as bullish a near-term structure as you can get. At this point, if we're going to hold this formation, 75.50 and 75.80. So this might actually be a decent swing type of opportunity here against this region. That being said, here's what the intraday chart looks like. Okay, so within this confines, this was the near-term target on the breakdown. Didn't happen until later in the session there. You got 3:30 in the morning here in the United States, right about the break of the European opening range. Led the decline from about 25.20 into 75.20 right into about 74.80. 40 pips to the downside. You're looking for about 25 per scalp. So momentum, former resistance trigger, caught a support, and here we are again. All right. Now for this trade, it goes neutral here completely. And the reason why is because this is the weekly opening range. If this breakout had followed through, this would be a basic opening range play. You'd look to maintain constructive bias. Now that we've broken back below the opening range high for the week and it's still serving as resistance, you want to be wary of trying to do anything here. And the momentum flattening right at 50 doesn't give us much conviction either. So here's the broader structure, and this is all I'm focused on for the Kiwi right now. Okay? To validate that turnaround, to validate whether that tag of resistance that we saw in the daily here is going to actually hold and give us a pullback towards 74.50, we'd need to get back below essentially the Asia Pac low, 74.70, 74.80. Other than that, as we head back into this region, you'd be looking for short triggers against 75.80. I think that's going to be the level still that you'll want to really keep in focus. Let's see what the Kiwi looks like on the intraday, or on the 5-minute rather. So the only thing I just wanted to point out is the difference or the change in even the near-term momentum signature. So remember, we use the 5-minute to actually put us into the trade. Here's where we execute. Okay, here's where we execute. Okay, in fact, this trigger last night on the back of that data, that really strong retail trade data or retail sales data we got out of New Zealand, you saw an emotional spike high. Okay, some divergence into the highs, right? You're looking at the close for divergence, a little bit of a higher high here, a much more substantiated low here. One above 70, one below 70. That's a decent trigger. And to stop against that excuse me, a swing high after the trigger would have been a decent trade, looking for about 25 pips per scalp, and it would have worked out really well. You would have actually been able to take a good 50 chunk there. But at this point from where we are, look at the momentum signature. So we came starting the week constructive, right? Overbought, 40 hold in momentum, 70 break, right? Here, 40 hold. Now 60's holding as resistance all of a sudden. Now 40 breaks, 60's holding. Okay? This is what a turnaround in a momentum signature looks like. So you look for that tendency from the 40 hold, 60 break to the exact opposite. Now you're looking for a 60 break, 40 hold, 60 break, 40 hold. Now this could plow right through, and if the opening range breaks and it goes right through 60, you don't look at that anymore. It's no longer the case. But as long as that is the case, you want to be mindful of that turnaround in the momentum signature. So little subtleties here that you can tell intraday that'll help you, kind of get a feel for how to read the momentum signatures. Eileen says, glad you too. I also tied up a couple of positions that ended up flat. Good to know I just sat it out, says Eileen. Yeah, I mean, obviously getting a flat position or getting a flat performance on the end of the day is not our ideal scenario, Eileen, but we take what the market gives us, guys. And it's pointless to get frustrated or ticked off. It's just what the market conditions are doing right now. All right, so here we go. Looks like we're going to plow right through. This takes out the initial ranges here. And again, not really looking to play the long side of the Kiwi. More interested in seeing where this thing finds some resistance at this point. Let's see if that caps the advance there. There was a trigger break for the Asia high with price of the first hour opening range on the 5-minute, says Tuttle. For Kiwi, let's take a look at it. Starting at the Asia high. You're talking about this one right here. So this would have actually been a decent trigger right into the close of Asia trade, right ahead of it. The rally into the high, a stop against the high with that trigger break after momentum filled at 60 would have been a decent trigger. You might be talking about this trigger. I'm not sure if this is the one that you were looking at. That's almost a 4-point trigger there that broke. But if you're talking about the Asia opening range high, are you talking about the long trigger there? The trigger for the break of the Asia. Okay, so you might be talking about the Sydney highs right here. Tokyo actually opens a little bit later in the session, right? So if you're talking about this, you had a couple of hours of trade with the break. I'm very mindful of the Sydney opening range. It tends to be really it tends to be a difficult range to open unless you have a little bit more clarity. You could have worked with that. And that would have been like a 60 break in momentum that given you the long. You're looking at this. It's too far back. That was a decent confluence break. And in and of itself, the 70 break above in momentum here with it taking out the New York and London highs would have been a decent trigger as well. Would you take it? Steven is saying, would you take a trigger at the end of the session? It depends which session you're talking about, Steven. At the end of the U.S. session, not very likely. Spreads tend to blow out. You get a lot of chop, a lot of settling in positions towards the end of the day. So I don't really like doing it there. Heading into the European-U.S. crossover, sure. A lot of times, like I said yesterday, guys, as the European markets close, specifically as you get into the close of UK, you get those markets just jamming out the price in the opposite direction of the daily trend. Sometimes that offers a great entry to get back in. And if you're talking about the Asia close into Europe, those sometimes are the best plays, actually. So it depends which session you're talking about, Steven. But yeah, you try to take every trade on its own merits on what you're seeing in price. Okay, I see some great questions here, guys. I want to try to get through all these. So let me just jump through the last couple of setups from the intraday. Any questions on the Kiwi? Again, not really interested in participating on the long side at this point after such a rally off the lows, but we're looking for tracking resistance near 75.80. I think it's a much more compelling region. A break back below 75.70, 74.70, 74.80 puts us a little bit more on a near-term bearish trajectory, looking for a move back into the median line here off the highs. Okay, despite what you're seeing in real near-term price action, guys, the broader structure still remains pretty clear. Okay, we're just getting a lot of chop here. Here's what your Kiwi yen looks like, and again, this is a trade that wasn't all that compelling here. We were looking for the hold into 89.50. Remember, that was a major resistance level we talked about on the daily chart. Represents so much. We're still basically there, but the 2014 April high day close. You also had the median line off the high, which was exact confluence there yesterday. Add to that those close lows that you made back on the April pullback there. So it was a nice area of resistance. Long story short, the break kept the upside bias in play. And what was the initial target? It was 89.95. So once that sorry about that. There we go. So once that target finally broke out, or not broke out, excuse me, once that, get this There we go. Once that level gave out at 89.50, the 90 handle was really the focus, and that was the opening range high. It's the same exact setup as the Kiwi, and the 50% retracement of decline, and the swing December low. So you had a lot to look at right at this region here, and this is what's offering near-term resistance. Now, if we are clearing this median line to the upside, and momentum is holding above 40, obviously, after a 70 tag here, you don't want to start fading this yet. And at the end of the day, you could still get a stretch right back into 90 to offer another entry. But we're weary of long side exposure sub 90 on Kiwi yen. Okay, you have the 100-day moving average there as well, 89.95, almost exactly the same range. And a 40 hold in momentum on the daily chart. So if you get this push back into momentum again in 50, this is where the trigger becomes really operative. Because if you get short triggers in momentum here, look to play the pullback against the highs. If this plows through 50 and makes it through on a closed basis, that 100-day moving average, guys, we're probably going to see this thing run right into like 91, which would be a basic upper or median line parallel there. Just remember how critical nature this support was for the Kiwi yen. Broader median line off the highs from April. Current operative median line, not only of this pitchfork, but also of the near-term structure off the high. And it was an outside day candle. And now we're trading above the 200-day moving average. So it is a constructive trade. Again, the near-term uptrend at resistance. Remember this trigger that we looked at on Tuesday? It finally just gave out. And one thing I want to point out is a lot of times you can get an inverted support trigger. So what that means is, seeing as how this has 1, 2, 3, 4, 5, I don't want to call that 6, but a 5 tag support trigger break, on these, a lot of times you'll get the snapback. Just as support will break and then be tested as resistance, support break, instant test as resistance, same thing the trigger will do sometimes on the turns. You'll get the support break for the trigger, will come back tested as resistance, and then on this hold, on the downside, you'll get another trigger break, and that's sort of reaffirming the turn in momentum. Right now, we don't have anything to validate that because momentum hasn't even made it for a 40 tag, but that's what I'll be looking for. Okay, we'll be looking for an initial hold in momentum at 60 and a short trigger subsequent to tell us that we're going to hold that weekly opening range, right? Here's the weekly open. So again, another look there at the Kiwi dollar, or at the Kiwi yen rather. Questions on Kiwi? Took 35 pips on Kiwi yen this morning. Thanks for the help yesterday, says Ty. Ty, nice play, man. Yeah, you can always feel free to reach out, guys, on Twitter. We'll always try to get you a response if you have any questions, but got to be patient sometimes because again, we're not going to be in front of the computer all day. I did see some questions there that came out, but feel free to reach out anytime. Okay. Moving right along, last but not least, we'll take a look at the euro, and then we'll take a look at some euro crosses. Here's what the euro dollar looked like. Again, the upside bias remains in focus. We kind of tried to highlight that yesterday. It remains in focus above the highlighted region. And in fact, euro did press into fresh highs. Again, it's frustrating for me because these triggers have been playing out beautifully in European trade, guys. You guys are still getting the cream of the crop as far as some of the European crosses are going. Sterling's been a slow grind higher, so unless you're willing to sit in that for a while, the euro's kind of been the play here. So we didn't. There was the bearish or bullish, invalidation level. We didn't even come near it. We got a break in early European trade, tagged right into 113.90, 114.07, and that's sort of the region that we're dilly-dallying around now. This is a short-term structure. Again, I added yesterday. Really near term, you don't want to stress it, but you can see it's actually been offering some really nice guidance here. And I'm going to give this a little tweak to account for more recent price action here. There we go. A little cleaner, right? And it brings into focus at this point, heading into the U.S. trade session right here. So the same level, 1390, that's going to be your bullish invalidation level. If we break below that near term on the divergence that you're getting in momentum, on a near term trigger here just off the lows in price from yesterday, looks like that already gave out. And this would be your invalidation. Looks pretty interesting, actually. What's that? 1390, 1386. Be a 50 pip stretch. Let me see what the near-term triggers look like here for the euro dollar. 5-minute chart. Okay. All right. So this was another trigger you're watching. We want to see if the momentum starts to turn over a little bit more aggressively. I don't necessarily. Let me show you the daily chart for the euro dollar, guys. Here's the major resistance I would love to sort of take a stab at from a fading standpoint. We probably shouldn't just be looking to short this at all right now. But here's what the major area of resistance. You're basically looking at 114.73. The close highs for February. A 1618 extension off the advance from the lows of the year, which obviously came off of a multi-year trendline support. We've been looking at that. And it also represents the current operative slope resistance or upper median line parallel. They all line up right here. Right here. Right? 1532, by the way, is just the highs for February. So a nice area of which, if we get a decent long trigger, I still think you can probably get the stretch into it. On the near term, this is kind of still the slope path that you want to follow. But there it is, 1470. You see it? Highlight that for you. Right there. That's really, I mean, a little bit more of a comfortable resistance target I'd be looking at for euro dollar. Beyond that, you're basically got 116.50. But keep in mind, the one thing I just want to keep in mind is that the euro is already 1,000 pips off the low, essentially, guys. 104.60 was the low that we made for the year. So keep things in perspective. Mark saying euro dollar hoping for another touch of that upper parallel to go short, but maybe already going down. He says, ha ha ha, that's what you just said. Yeah, that's sort of my ideal play too, Mark. I'm not sure if we'll get this stretch. I suppose there's really nothing to stop us now that the dollar, again, Roseman, here's a quick look at the dollar, my man. Right? So remember that level that we talked about yesterday, 11,664? I know you couldn't hear earlier. Here's the lower median line parallel, or the median line parallel, excuse me, off the highs. And again, that's what's in focus here near term as support. If we make it below the bottom end of this, 11,560 is where I'd really be looking for a little bit more of a next support target. Momentum has already broken 40 for the first time, essentially since June. We looked at this stuff yesterday. You saw a continued decline there for a couple of days before it started to come off. But in any event, I'm weary while above this near-term median line. Bearish below 11,737. Near-term resistance 11,664, the same level that we targeted yesterday. So none of the levels have changed, Roseman. And if you go on the SB Squawk, you'll see the retweet from the dollar index chart earlier this week. The levels are exactly the same, no change here. All right. So that is the euro dollar. Roseman says, thank you, sir. You're more than welcome. Sorry you had those audio issues earlier. Hope you got that resolved. Wouldn't want you to have to use the phone every day, but I'm glad you can hear. So we'll be looking for whether we get some sort of inflection here off 1390. Again, this is going to be your invalidation for that idea for a breakdown. And also, obviously, if this breaks to the upside, guys, and this low is held, ain't nothing wrong with taking along against that low for the U.S. opening range session and trying to play that rally into 1473. I'd rather be more attentive to shorts up here, but certainly on the opening range break, this is going to be our near-term bullish invalidation level. Okay, downside break, you look for the U.S. Opening or the Asia, lows that we made yesterday, and then the lower median line parallel. So this is sort of a little setup here heading into the U.S. trade session. You're either looking for a breakdown here to play the short into median line support. If this holds into a nice opening range for U.S. and you get a topside break, stop against that low, looking for a stretch into 1470, 1473. All right, so that is the euro dollar. Last but not least, we can't go anywhere we're talking about gold, because what a move it made. So, what can we say here about gold? Major area of resistance. This is a breakout trade, guys. So when we're talking about resistance on a breakout trade, it's never going to be to press the short. It's always going to be where you want to be looking to book profits, or whether you want to be looking for a pullback to get back on the long side. In my humble opinion, again, the breakout is sort of validated by a couple of different things. Don't want to say that we're getting a major reversal to the broader trend, but certainly on a weekly basis, on a monthly basis even, you want to be wary of it. So here, of the short side. So here's the opening range for May. You saw a stretch into 1200. You saw a pullback that tagged multiple times into this 1170, 1177 range. It's kind of messy here on the lows. Momentum, sort of holding the lows in momentum for the previous month. On Tuesday, we said watch for a 50 break and see if this breaks above the upper median line parallel. That's exactly what we got in one fell swoop. This thing went from 1192 right into the 200-day moving average. Now, the significance of the 200-day moving average, guys, is that every time we've touched it, it's offered some decent inflections or consolidations. And here's the last time we touched it. It was right here on the 29th of January. You saw we recouped the entire move on that day almost. That was pretty wicked, actually. I remember this day. But in any event, that was the first touch we had seen for a couple of weeks. The following touch sailed right through, right? Before that, you can see some really nice pivots right here into the July trade and the open of September. So the fact that we came into it yesterday, we didn't really see much of a pullback here. And if we continue through, validates even a break of this median line formation, which goes back to the July highs. All right. Long story short, near-term resistance, 1225, that's 50% retracement, and just above that April high. If we get through that, you're looking at 1245, 1250 on a topside run here. Near-term support, let me take that back. Near-term support is going to be right around 1210. Look for these close highs. Look for that longer, broader median line that we were talking about yesterday. Okay? And the invalidation level for the broader side of the trade is 1200, and that's a simple objective opening range high for the month. We break back below that, it invalidates this sort of breakout play in general that we're looking at. But broadly speaking, looking constructive here on gold. And if the dollar continues to give us this downside spout, guys, that starts to accelerate. Even if you get a little bit of a recovery here into the end of the week, the gold trade should remain well supported. And for those who are looking at simply the fundamental story for gold and saying, Mike, this doesn't make any sense. The Fed's going to move on rates. Why would anyone put their money in gold? Doesn't pay a dividend. Inflation, is not a concern. So those inflationary hedges that you typically see gold catch a bid on is not there. You have to take into account a couple of things. A, we've been getting a little bit of softer data from the United States. And as much as everyone wants to harp on the fact that the Fed needs to start easing, at the end of the day, they are not in a rush. I'm not going to go over in my opinion again because we've talked about this. I could keep going for a while. I don't happen to think the Fed's going to even raise rates this year. But in any event, this is just an adjustment in the interest rate outlook. And you saw yesterday after that data came out for retail sales, the advanced retail sales for April, you saw some bank research notes already start to push back those June projections of an interest rate hike to September. And now they're even saying, it might not be September now, right? That mentality, when you start to hear those headlines hitting, the market reacts. What does the market do? It starts to price out a further rate hike. So instead of, nearer term in September or even, late in the year, Now they're starting to press it out a little bit further, and that's going to see an adjustment in not only the dollar but also the bid for gold. Okay, if economic data starts to turn around, if interest rate expectations get pushed out, that's an obvious bid for gold. It's an obvious bid for gold, and what we're seeing in the volatility for the equity markets is only going to propagate this further. Okay, so watch 1225. That's the initial topside resistance, constructive above this median line, bullish invalidation only at 1200. Questions on gold? All right. So that is the contents of the intraday page for today. Those are sort of the major setups that we're looking at on the scalp by scalp basis. I want to jump into as many questions. I saw some beautiful pairs here people want to look at. Euro Oz. Who was asking about that earlier? I think I saw that. Ooh, Philip, Aussie Yen. We'll take a look at that as well. Okay. Excuse me, guys. One sec. Sorry about that. Just going through some of these. Okay. I thought I saw a question on Euro Oz. But let me take this question from Philippe. What do you think about Aussie Yen? It looks like the uptrend is restoring. So Aussie Yen on the daily basis, here's what the daily chart looks like. And the one thing that we pointed out was this median line, which is basically just a mirror or a parallel of the operative structure that we're in. Kind of caught the highs perfectly yesterday. We sailed through it again today, but here we are back below. So I don't necessarily say the uptrend is well, first of all, the uptrend was really never refuted here, right, Philip? We just got a pretty nasty pullback on that stretch today, and because of the, I guess what you're seeing, the divergence with the Aussie, which is still pretty lackluster, and the yen, not too surprising to see that jackknife action. Here's the scalp chart. I have it on another page. Hold on. Aussie yen. Here's the scalp chart. Right, so it wouldn't necessarily say that the uptrend was not in play. You kind of just got to pull back. In fact, that looks much cleaner. Touch, 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 touch. Support, resistance, resistance, support. A little bit of a breakthrough, but within the confines of this structure near term, still puts us on a constructive path here. Okay, so a couple things we'll just know. And by the way, I'm just taking a look at this for the first time here this week for you. So by the looks of it, looking at the momentum signature, you start off the week pretty constructive, above 60 here. This is divergence, right? Even when the market holds equal highs in momentum, as long as price action is making a new extreme and this isn't, that's in my mind divergence. Obviously, as I always say, divergence above 70, divergence below 30 are going to be always your weakest signals, but it's something to take note of. And then this is the lowest momentum read since the week started. Could be turning over. I'd still be more interested in that tag of 97.68 on this, which is basically the 618 extension. You got that highlighted up there. I think that would be a little bit more of a compelling area for me to start looking for resistance. So while you're above 96, I mean, I still think you got to remain constructive on it. I still think you got to remain constructive. Yeah, that would be my near-term bullish invalidation level, Philippe. Above 96 constructive, really 97.68, 97 or 97.70 here, a region of which I'd be looking to target for long scalps on this. Broader bullish invalidation for the scope of the trade here, for the scope of the week heading into the close would be here. Okay, and that's basically the initial opening range high. You have the highs from Friday, the stretch lows from Tuesday, and median line parallel. Again, this was the bullish invalidation to start the week. Raised that up into 95.30 at this point. Does that make sense, Philippe? Hope that helps there on Aussie yen. Question from GS saying, dollar CAD, please. Sure, dollar CAD. It's an interesting weekly chart for dollar CAD. Here's dollar CAD looks like on the daily. Okay. So we've made it outside the underbelly here of that highlighted resistance that we were looking at to start the week. Remember yesterday I was very reluctant, guys, to do anything on this. I think we were talking about it in the webinar because of that parallel, because of that 38.2, that 1985 region into 1960 region, sort of exactly where we closed, 1955. Really hairy region for me. I just don't see the ATR panning out somewhere here where it's worth it for my risk to reward, GS. Listen, it's a downtrend. I expect it much, much lower. The momentum signature is clearly broken down from the constructive path that we've had, off of the lows from July. But at this point, from a scalping standpoint, the volatility just kind of isn't there. The levels are clean, and if you're willing to sit in it for a while, like I said, it's kind of like a pound trade. Intraday, you want to be short. Do I want to take anything on from fresh exposure down here? Can't really validate it. I know ATR is showing 29 pips here, guys, but if you choke this up, see what the 14 looks like. It's the same. I mean, for the last 3 weeks, it's essentially just been a sliding range. There's really not much going on. Wouldn't want to intraday scalp this, guys. It's just too chopped. I'd be more just looking to sell near resistance on the trend lines and buy near support. Not my cup of tea. Looking lower, if you close below that on the daily chart, or if we close where we are right now, you're basically looking for a drop into like 118 as an initial target, which is the lower median line parallel. You have the 200-day moving average coming in at 117.50, and this is sort of major support right here. You can drop down bearish invalidation at this point to that median line off the highs. So whereas we started the month 1220 is bearish invalidation, I'd kind of be comfortable right now using this week's opening range high, and that basically takes you into like 21. Instead of 2120, you can drop it down to like keep misquoting you guys. I'm sorry, 2200. The highs for the month. Talking too fast. Was where we started with the bearish invalidation. Now you want to drop that to 2120. Near-term resistance, obviously 1890 still. And then again, you have the downside targets. G says, okay, thanks. Hey, you're more than welcome. Little lackluster, And at the end of the day, GS, one thing I just do want to note is the monthly opening range low comes in at 119.39. So we're really not that far below it. So whereas the sterling, the euro, the Aus, whereas those have broken the monthly opening ranges, dollar CAD technically hasn't even made the close below yet. So I just want to keep that objective picture in mind. So where I'm looking to operate, kind of just want to jump into those ones that have that clear, definitive break on the ranges already. Does that make sense, GS? He says, thanks. You're more than welcome. Okay, Raj, there is the question. I was looking for you. He says, Mike, can you take a look at Euro Aus? Now that it has broken out of the upper parallel, should we be looking to buy dips? Euro Aus. Okay, here's what the daily looks like. Okay, let's see what the intraday looks like. Yeah, I mean, it looks to me that I see what you're looking at. I see what you're talking about. This would have been, in my mind, this would have been near-term bearish invalidation as well. And that was the first 60 break you're seeing in momentum. But this could be a classic false break. Classic. Especially because you sailed through 60, held 70, and right back below 60 again. And price is back within the confines of that same formation. Doesn't bode well. I'll tell you what, though. Hold on one moment. Okay. I'd be looking for support near term right around 140.16 again, which was a pivot that we used, but it was also the 50% retracement of the entire range and the lows for last week, the actual stretch lows. So you can see that little pivot there. I'd be looking for that support. Below that, if momentum breaks the support barrier, yeah, I'd be looking lower. Remember, it looks like you just made an attempt at the weekly opening range high. This is where we closed last week, right? The close of last week's trade session was 141.22, right there. You came right back into it and you failed. Now you're turning around and you're more than 70 pips off the high. So yeah, I wouldn't be looking to buy pullbacks necessarily just yet. I'd see if we find some support at 40.16, but if we break below 40.16, I'd be looking to target 39.36. I'd be looking to target this region down here actually. So remember the formation there, and the broader formation is still only in the trajectory here. And he just came off of median line resistance, so wouldn't be surprised to see us go for a test of that median line off the highs. Does that make sense? Sandy says, I sold Euro Oz. Oh, nice. I short at 142. Beautiful. Nice entry. Nice entry. What's your target on that, Sandy? Josh says, I sold too, but got clipped. So, Raj, let me ask you a question. You got clipped on the short, right? Where was your stop on that? Because guys, here's the thing: if you're working with the strategy and you find that you've gotten stopped out a few times, but the directional bias was correct, there's only two possible scenarios that is going wrong. A, your stops are either too tight, or your entries are too far out. You know, you're jumping into the trade too late, where when the market gives you that little wave back, it's stopping you out, then continuing back. So Raj, I want you to examine your last couple of trades and kind of take a look at where the entry was. Just keep that, something in mind there. Weekly S2 is what Sandy says her target. 139 is the first target. 139. You're basically looking just below those lows. Okay. I'm going to bring this into, what is this pair? Euro Oz. Let's see what the 764 looks like first. Okay. I like 139 because I feel like that's going to be wherever the just ahead of wherever the median line is by the time we get down there. Before you target something quite that low off 142, I just want to put in your mind this broader setup here with the median lines here off the highs. So keep that in mind, Sandy. I love the entry. I would be bringing that into the last swing high here once we get back below 140.16 if you can. But nice trade. Nice trade. Raj says stops at 141.30. Entry was okay. So that wasn't necessarily a scalp, right, Raj? I hope we're not putting 130 pip stops on our scalps, guys. Raj, make sure we're keeping things objective, if you're looking to take a longer term position trade, or if you're taking it on the basis of the swing trade. Oh, he's talking about a swing trade, right? Okay. Yeah, well, that's a whole different ballgame, right, Raj? Adria says, "Morning, Mike. How many screens do you look at work? No, maybe I should ask your setup with your screens are. I have 5 screens and just need an outlook to organize myself." I have 4 screens, Adrius, believe it or not. One of them is on both setups, on both office desks. One of them is a little bit larger, obviously, like a 30-inch or 32-inch, I think it is. But typically 4 will do. Guys, it's not all necessarily about watching everything at the same time. For me, from a scalping standpoint, I want to have as many of the setups in front of me as possible, because as the day progresses, I'm just going to jump in and out of those. I don't necessarily have to flip through the charts all the time, right? So there is something called analysis overload, paralysis by analysis. And if you stay too close to the markets, guys, it can be disastrous sometimes. But I just think 4 screens should more than suffice. Looking at some other questions here real quick, guys. I know I'm over on time, but I just want to jump real quick into some of those questions. U.S. oil breaks down again, tested the ascending trend line again. Dollar CAD bullish might work out, says Mark. I do want to take a quick look at oil because it's making a lot of ruckus lately. Here's what the oil trade looks like. I don't see what everyone sees yet, okay, of a massive sell-off in crude yet. I just don't see it, okay? If it breaks the opening range for the month, if it breaks the median line, short, get short. I'm with you. Momentum gets below 60, sure, let's do it. Right now, I just don't see it. Okay, we're still holding the median line support. If you bring it into a closed chart, it looks even cleaner. That's all I'll say. There is some divergence into the highs, but the trigger hasn't given out yet. So I think you do get a correction in crude at some point, for sure. But this thing could go right into the trend line or median line resistance first before we do. And it's really the break below this on a closed basis that'll even put that play in effect. So until you do, guys, until you do, the range is well defined, and just keep this formation in mind. Once we get this break, that's when we'll get a little bit more of a definitive directional bias. Other than that, it's a constructive trade still. That's how I'm seeing it. All right. So that is crude. And I think I got all of your questions. There was one here from Sandy on the DAX. And thinking to short gold, she says. So we went over gold. Sandy, did you get that? Did you get that coverage for gold? Yeah. I would just be weary ahead of like that 1225 level, because this was massive yesterday. So we just want to be weary of that before we start fighting the trend. Looking at the DAX, I haven't looked at the DAX in quite some time. By the way, this is Euro Dollar. On the 30. Okay, watch that. As we said, heading to the U.S. Open. We are in the U.S. Open now, about 4 minutes into equity trade. Looks like it's going to make that break. Here's a trigger too. Okay. The DAX real quick for Sandy. Here's what the DAX looks like, German 30. Here's the open of May trade. Oops. Okay, so again, I don't really follow this indice on an intraday basis at all, Sandy, but this is all I'll say to you. I think it's very exceptionally clean monthly opening range. The DAX actually performs pretty decent with monthly opening ranges. Here's the opening range for January, clear break, close at the highs. Here's the opening range for February, clear break, close at the highs. March wasn't quite as clean, but you got the April opening range, stretched into it, didn't break until the 17th, but we closed at the lows. Here you are setting up a beautiful opening range. I wouldn't do anything longer term until we break that. Near term, yeah, maybe look for resistance at that upper median line parallel again, but it's getting kind of messy. So that's sort of an objective view here for the DAX. The momentum signature hasn't really broken down yet, so this still could be a little bit of a near-term recovery, so I wouldn't get too crazy on the short side until we break the monthly opening range. But Looks like you're opening up May pretty nicely here. So Sandy, hopes that a quick look at the DAX. If you're holding long exposure, she says I'm long DAX. She says, right? Yeah, I wouldn't get too aggressive on it again. I'm not sure where your target is on this on the broader scheme. Basic trendline support off the December lows here is coming into view. So if you are going to see a little bit of a completed rebound here, maybe something like that would serve you pretty well. Looking for resistance around 11,590 and then up into that parallel, probably 11,720 or so. All right, looks like you actually just got a trigger not too long ago, so hopefully you can get a little bit more of an upstretch on that. Okay, hope that helps, Sandy. On the DAX, guys, I want to wish you the best of trading for the rest of the week. As always, we're always open to your feedback. We always want to hear from you guys, the user base, so please feel free to email us at info@sbtradedesk.com. You can also email myself or Jamie at mboutros or jsetley@sbtradedesk.com. Have a great day trading. We'll keep you updated on SB Squawk. We'll see you next week. Remember, public webinars on Daily FX are on Monday, guys, here on SB Trade Desk. The full sessions come in Tuesday, Wednesday, and Thursday. I'll have this archived as soon as I can and post it on the site. Have a great weekend, guys. Cheers.